Welcome to the Lex Factor. Today we are going to be speaking with Robert Grzesik from Lumiwealth. He's going to show us some of his bots that have been doing well, and we're going to break them down a little bit. So let's get right into it after the bell. Here it is. And it's going to come up. It's going to come up. Oh, yeah. It's better. I like it. Okay. How are you, Rob? Good to see you again.
Yeah, doing fantastic. How are you doing, Lex?
I'm doing great. So we did one of these a while ago, which was fun. Your product's awesome. Pronouncing it correctly, Lumiwealth, right?
Yep.
And this is the Lumiwealth bot episode. Affectionately, we kind of coined that before the show, but it's going to work. Let's do this. Let's just kind of reintroduce yourself so folks know who you are, and tell us a little bit about Lumiwealth as well and what's going on.
Yeah, sure. So to introduce myself, I'm Rob, CEO of Lumiwealth. I've been doing this stuff for quite some time. Everything from trading, I've been doing for well over a decade. Worked at a bunch of different financial institutions, and my specialty is really building trading algorithms, trading bots. The reason why I really got into this is because I've been basically coding my whole life. I've started a bunch of software companies, and this just is so obvious, right? Like with the advent of AI, like it really, to me, it makes a lot more sense for someone to trade using an algorithm rather than trading stuff manually. You could avoid emotional mistakes. You could be a lot faster. You can make better decisions. There's a lot of really good benefits from it. So that's basically what Lumiwealth does, right? Is we build these trading algorithms. We teach people how to do it. If that's what you want to do, you want to learn how to build them yourself. We build them for you if you have an idea that you want to automate. And we also have a bunch of algorithms that you can just choose from, right? And we have a bunch here that I want to show off that we've been running for some time now and are actually doing quite well.
Great. So do you have to, before we jump in, do you have to be a coder and heavy duty technologist to be able to use your product? What would you say to that?
Absolutely not. No.
So, yeah.
If you are that kind of person, we can help you and we can kind of get you to the next level. Okay. But we spent many years building this product out to make it so easy that you don't need to be a coder. We'll get on the phone with you, we'll set all this up for you, and you could just run them and that's it.
Perfect. And then how would you describe the, how do you get the offering? You got to go to the website, obviously. Subscribe on a monthly basis of sorts. Is it something like that?
Yep. We have 3 different plans. We have our starter, pro plan, and all access plan. Okay. And it depends on, how much help you want. Like our all access plan will help you build like your own custom bots. If there's something you have in mind, you want us to build it for you, we can do that with the all access plan. Our pro plan basically has all of our algorithms. And then our starter plan gives you kind of like that beginning, that taste. You get to try a few of our things and see how it goes.
Yeah, makes sense. Okay, awesome. Lumiwealth.com, or is it .something else?
.com. Yeah, .com.
Okay, good. Sometimes it's AI, IO, you never know. But we're going to throw all that into the feed when this is all finished. It's going to be awesome. Cool. All right, do you want to go to a couple of these? Should we do that first?
Yeah, sure. I could show off a couple of them.
All right, let's get into a couple of these. Let's have a look. All right.
Sure. So last time we were here, we actually talked about this algorithm, right? This is a new one that we made a couple months ago. Okay. We spent a lot of time researching this. This is our Iron Condor trading bot. We call it Options Condor Martingale. Some of them are Martingale, some of them are not. This one in particular is not. If you're familiar with what a martingale is, right?
Well, let's explain it. I know what it is, but some people might not know what that means. So let's just hit on it real quick.
Sure. So for starters, these trade iron condors, right? Which means basically or specifically sell iron condors. So what that means is that you're basically betting that the market doesn't move, right? So it's not a directional play. Some people think that there's a bear market that might be coming. Some people think there's a bull market. It really doesn't matter. As long as the market's pretty calm, we're making money here. Right. That's what an iron condor does. You're selling a put and a call, and then you're hedging your bets on both sides with buying a put and a call. So you end up making some money as long as the market doesn't move too much.
Okay.
And then we have a bunch of other things that you could do with this, right? You could basically say, well, if the VIX is too high, right, maybe then I don't want to trade, right? Or you could say, you know, if the market's not trending upwards, I don't want to trade. We have a bunch of different configurations that we do around this. We've researched a lot of things on what makes iron condors successful, right?
Okay.
VIX being one of them. If you're trading gold, for example, there's a VIX for gold as well. There's like different things they could do there too. So the martingale portion of it specifically is we had someone come to us a while back and say, well, we've been making a ton of money doing iron condors, but we use a martingale where they basically double up their money every time they lose, right? So if they lose, they double their money. If they lose, they double it again. If they lose, they double it again. And the reason why you do this is because the probability of losing so many times in a row is very low. So you're having this very smooth looking graph upwards, which is pretty cool, right?
Yep.
So we did that. We have a couple bots that use the martingale, a couple that don't. It kind of depends on, you know, your risk preferences and what you believe about the world kind of thing. This one here in particular does not use a martingale.
Okay.
This just trades iron condors. It uses specifically a 12 delta.
On the short, the short options are 12 delta. Is that where you start?
Yes. Yeah.
Okay.
It's a 12 delta on both the call and the put on both sides, the shorts. And then it's a $1 wing, which means the buys are $1 over.
Got it.
Right.
Perfect.
Okay.
Yep.
Well, this is basically trading that. When we backtest this, and we've done a lot of different versions of this, right?
Sure.
So here's version 12, but we also did, you know, version 16. There's a bit of a newer one. Version 17 is a bit of a newer one, right? They're getting some pretty crazy results, right? As you can see here. But I want to talk about the 12 for now, just because we've now been running this for a couple of months now, right? So we're starting to build that track record. When we went through this, we back tested it, we researched it really heavily. We have this class that people, if they join one of our plans, you could join on this too. We have a Tuesday class where we're just constantly discussing trading algorithms and strategies, and we build them during that Tuesday class. And this is one of them that we built out. This is a collective effort of like maybe 6 months worth of work on this one strategy. Yeah.
Okay.
So we got some pretty crazy results, as you can see here. Annual return 77%. Historically, this is back tested since January 1st, 2020. So about almost 5 years. Yep. Right, over that time period, did about 77%. Right. With a pretty reasonable drawdown, 31% drawdown, which for people that don't know what a drawdown is, it's from the peak to the bottom, right? So this would be a drawdown here, right? From this to this. Yep. Maximum drawdown is just the worst drawdown that you've had.
Right? I gotcha. So is 31%? Is that reasonable? I mean, I don't have a barometer. Sorry.
Yeah. So you could actually customize this. Like if you think 31% is too high, you could reduce it, right? Okay. But what we do when we build our algorithms, and at least the way that we think about it, but again, this is highly customizable by customers. Like if you want to change this, if you want a lower risk version of this, you could do that. Or if you want a higher risk version, you could do that too. But we try to get it around a 30% drawdown. And the reason why is because the stock market has around that type of a drawdown over this time period.
I gotcha.
If you did the S&P 500 over this time period, and I think we have the numbers here actually. Yeah, the S&P 500 did a 33% drawdown over this time period, whereas this strategy did 31%. Okay. So it had a lower drawdown than the S&P 500 and significantly higher returns.
Sure. Yep. So far, so good, right?
Yeah, so far, so good, right? Yep. You know, that's a very good trade-off, a risk trade-off, I think, right? And last time we spoke about this algorithm a little bit, but now we've actually been running it for a while. So I want to show the audience a little bit of how it's actually been going so far, because it's one thing to do the research and do that, but then when you actually see these things perform, you start to see, wow, it actually does match the back test, right? Here is this algorithm. This is specifically the version 12, right? That we've been running since August 6th. So today is October 22. So that's what? August, September, and half of October-ish, right? Yep. Let's say 2.5 months, we're at 14%.
Okay. Awesome.
Right? And a very nice upward looking graph. not very correlated with the stock market. If you
Mhm.
were to overlay the stock market over this,
Mhm.
they're going in very different directions. And
Yeah.
if you're someone who trades a lot, you realize how important that is too, right?
Mhm.
It's
Mhm.
not just about the direction; it's about the correlation because it's part of your portfolio, right?
Okay.
So this one's up 14% in 2.5 months. If you think about it, that's pretty much in line with it hitting this 77% a year goal,
Mhm.
right? Do the math, times 6, right? We're hitting about a 77% a year return. We're right
Mhm.
in line with that.
Great.
And not only that, but we're also seeing a very similar looking type of graph, right? Very stable up and to the right. You know what I mean? As long as the stock market's calm, it doesn't matter if the market goes down. You can see here, it was a bear market, it still went up, right?
Yep.
This may be an easier way of looking at it. Look, this is in yellow, the S&P 500 going
Yep.
down.
Mhm.
Same time period, this one was still heading up. So it
Yep.
doesn't matter which way the market goes, right? That's
Mhm.
kind of the beauty of this one.
Yep. I love it. Good. So this is in SPY, right? You said, I think.
This is trading SPY. Yes, correct.
And do you ever use this strategy in SPX?
We started doing that. We're still trying to work out the kinks for SPX.
Okay.
But yes, we are working on that. Yeah, because the reason why is because a lot of people are really starting to like this algorithm. We're getting a lot of demand for it.
Yep.
At some point, we're not going to be able to get that many people in it, right? Eventually, you run out of liquidity, right? So we're working on using the SPX so that we can support more people.
Gotcha. Okay.
Basically.
Yeah. The only reason I asked, obvious reason, you know, my little perch I'm sitting on late dealing with the retail folks, they all love the zero DTE SPX and the
Yep.
cash settled nature of it, the European exercise, blah, blah, blah. They just are eating it up. So that's one of the reasons I asked. Yeah.
Yeah, we've been doing some research on it. So here's some new ones that we came up with.
Mhm.
Here's one for that we made for SPX. We don't have the results in yet of actually running this thing, but this is
Yep.
basically our back test. We're able to replicate pretty similar results from the SPY.
Oh,
So
good.
they
Okay.
trade very similarly, right?
Yep.
If the SPX, I mean, it's literally that the SPY is based off the SPX, right? It's like
Right.
it's meant to imitate it. So we did get some pretty interesting back testing results, but we still haven't had a chance to run these for long enough yet to have any
Mhm.
kind of meaningful track record.
Got it. Okay. Great. I love the automation piece of the bot, right? You made mention of it when you first spoke today. Taking emotion out of the equation, right?
Yep.
Very, very critical, especially for what I would consider the retail world. Because they have enough trouble with trade idea generation, not to mention the discipline part of taking things on and off. And I love having some automation to help that out. I think it's great.
Yeah, I definitely agree. I mean, I was on TikTok, I think, the other day,
Mhm.
and there's this trader talking about, the most important thing with trading is to get your emotions mastered. I'm like, well, then why don't you just let a robot do it for you?
Yeah, right.
Right?
That'll do the trick, right? You might not like the result, but it'll do the trick.
Yeah, exactly.
Yeah, I love it. Cool. Okay, so you have another bot you want to show us?
Yeah, we got a bunch. There's another one here that I've been very interested in lately. We call this one, and this is basically if you sign up with us, you get access to all these different bots that we have. We have like lots and lots of different bots doing all sorts of things.
Yeah.
But to give the highlight reel, here's a new one that we made. It's our Alpha Fix bot.
Got it.
Basically, what this one does, and if you've heard of Seeking Alpha, they have this product called Alpha Picks, right?
Okay.
This is it's $4.99 a year to get basically stock picks from them, right? They send you 2 picks a month, and we built this bot because I built it because I was getting some really, really good results, right?
Right.
I've been using Alpha Picks for the better part of, I think, a year and a half now, something like that. When I sign up with them, they're $100 a month, right? But it makes sense they raise their prices because they're doing so freaking well. A couple picks, just to name a few. They picked Modine Manufacturing, for example, back in the day, and I was like, I have no idea what this company does. I did a quick Google search. They like build trucks and stuff like that. I'm like, okay, cool, but whatever. They're recommending it, so let's throw some money at it. Okay, I put in 20 grand. that $20,000, and maybe I could, it's going to take too long to pull it up, but that $20,000 that I put in has now turned into something like $140,000.
Oh, awesome. Wow.
So it's made me over 100 grand. So these guys, I'll pay them $500 a year. I mean, they have more than paid for that.
That's awesome.
Yeah. So, but that wasn't the only one, right? They picked a couple other really good ones. Like one they picked was SMCI back in the day.
Mm-hmm.
I didn't end up picking it because I was busy, right? I was like, it's great, you're telling me to pick this, but I was like, whatever, right? I didn't end up picking it, and I kick myself all the time for it, because if you've watched the stock market for SMCI, it's one of the best performers over the past year. It's up something like 1,000%.
Oh boy.
Recommended it.
Oh boy.
So you put in 20 grand to that turns into 200 grand, right? More than
that's a good one.
Yeah.
So now, what's the connection here then? So Alpha, Seeking Alpha, different from Lumiwealth, right?
Yes. So they're their own company, right? They do this thing, right?
Yep.
So what inspired us to build this was actually the fact that I missed that pick, the SMCI pick, right?
I got you.
Like, what if we just automated this, right?
Mm-hmm.
They're giving us these picks every single month, right? But it's kind of difficult. Like, life gets in the way. It's hard to, like, sometimes pick the right thing and do your research, whatever. So we're like, let's just automate this, right? So we automate this process basically from their website, right? We'll get everything from their website, say this is what they pick, and then build a portfolio around it. Wow. And historically, this is how they've done, right? This is their Alpha Picks portfolio over a 2.5 year period, something like that.
Okay. Not too shabby.
156%. I'd say it's pretty damn good.
Pretty damn good. I agree.
Yeah. Over the S&P, which did 50, which also did well.
Yes, they did. Yeah.
It's tripled the S&P's return, which is quite substantial, right?
That's substantial, yeah. Yeah.
So we have been running these bots now for a little while. And we have actually 3 different versions of the bot. And check this out. This is what gets even better, right?
Sure.
Here's the Seeking Alpha Picks bot that basically copies their portfolio verbatim. Okay. What they tell us to buy, I'm not going to go into it now because it's, I don't want to give away their trade secrets.
Sure.
They have like a page that says, okay, there's this stock with this percentage, this stock with this percentage. You can literally just pull that table and invest in that manner, right? This is copying them verbatim. Since August 20th, is up 3.5%. That's not bad. That's pretty good, right?
Yep.
But we took it a step further. They also tell us their recommendation: buy, hold, or strong buy, right? So this is buy, hold, and strong buy, all 3 of them. We built another portfolio that's only doing the buy or strong buy. Notice this one went from 3% since August, 3.5% since August 20th. This one's now up 9% since August 20th.
Wow.
That cut out all those ones that say hold, right? Because we don't want those. You're saying hold, forget it. Like, we're just going to buy. If you say buy or strong buy, we'll buy those. This one's up 9% since August 20th, which is quite nice. That beats the stock market by a pretty nice chunk.
Yes.
What gets even more interesting is if you only look at their strong buy picks. This one's up 13% since August 20th.
Wow.
So 2 months, 13%. Only stocks, not even investing in the options.
Yeah. Unbelievable.
Yeah. Wild.
Wow. Yeah. And do they produce this list every day, every month? How often do they produce the list of picks?
They send a pick twice a month. So so sometimes they repeat it. So sometimes they'll say this name, we still believe it and whatever. Yep. But for the most part, it's a new pick every 2 weeks.
That's awesome.
Yeah.
Wow. That's great.
Yeah.
So your bots now are replicating these picks. So somehow you're gaining this information, and then your bots behind the scenes are doing their thing.
Yes, correct. Yeah. Awesome. So if you're a subscriber to Alpha Picks, then we basically automate that whole process for you, right?
So you have, okay, and you have a little, relationship with Seeking Alpha to do this sort of thing.
Yep.
Awesome. I love it. Very cool. Wow. Terrific.
Yeah. That's another bot. We also have another one that we created.
Let's do one more. I'm looking at time here. So let's do one more bot if you have it.
Sure. So I'll show you one more. Here's a options trading bot. Okay. This one, we call it our rolling EMA spreads. Okay. And this bot, I don't have any back tests here for it, but we've been running this for some time now. This is one that I have some cash in right now. I put money in on September 18th. I'm up 11.5% almost since September 18th. So about a month. When we ran the back tests, this is what it looks like. Right. So basically what this bot does is it invests in call spreads.
Okay.
So based on strike prices, right? So we'll basically say we're going to buy the call option. I believe this one's buying it at 50 delta, so right at the money, and then sells another call option further out of the money. And then the reason why you're doing that instead of just buying calls is because when you do the spread, you get it for cheaper. It's a little bit less risky. Let's put it that way, right? Okay. So this one's buying these call spreads, but only in certain criteria, right? So it's if the market's trending up based off of EMAs, right? So we'll take a look at the moving averages, and if it's pointing up, that's one good signal. Another one is that the VIX is below a certain threshold. I think we set it at 16 on this one, right? And then a few other criteria. And when those criteria are met, we're gonna bet on we're gonna buy that spread, right? And this one's just on the SPY. I've been doing very well through our back tests, and also again through our actually investing in it, right? Sure. Showing us the same sort of results. Our back tests are matching our actual trade results.
Why do you have the VIX component in this algorithm? Any reason for that?
Well, first of all, it's just based off our research. When we back tested it and we ran it a bunch of times, we realized the VIX had a very big impact. Okay. But the reasoning behind that is really because when the VIX is up, first of all, the options are going to cost a lot of money. Sure. Right? So you want to avoid overpaying for options. And also the VIX tends to be up when there's a lot of uncertainty in the market, right? Which usually means maybe a bear market's on the way, or maybe we're in the middle of a bear market, right? As you can see here, because of that criteria, it basically skipped over all of 2022. It just didn't trade, which is a very good idea, by the way. Yeah, no doubt. Skipped right over that bear market, and then when things went back to normal, then it started investing again, and you see it just take off.
Nice, I love it. Yeah, I mean it's just so powerful. These algos, bots, whatever you want to call them. It really takes a lot of the heavy lifting out of it for you as an investor or trader, however you want to view yourself, right? Yeah, I really love it. I really love it. That's terrific. Cool, man. So it sounds like you guys are cranking.
Yeah, our algorithms are doing very well right now. Right now, we're just basically trying to figure out how do we handle more customers. That's our biggest problem right now.
That is always a good problem to have, right?
Yep. Definitely.
So I love that. Not a problem. All right. So Lumiwealth.com. You say it Lumiwealth. Did I say it wrong? You say it.
A lot of people say Lumiwealth. Some people say Lumiwealth.
Lumiwealth. I like that. They're both cool. Now, do you have any designs to do and become registered and do a brokerage? I'm not a brokerage, an advisory of sorts. Have you ever thought about that?
Yeah. So we're actually going through a fundraising round right now.
Okay.
So we're looking to raise money to basically make this process really, really simple. We're building out a website to make this very easy and get registered, all the kind of stuff legally to do this. Yep. Because right now we just sell the technology, right? You buy our technology and that's it, right? But we want to kind of get more into the investment, like actually managing people's money, that sort of thing. So we're doing a fundraising round to be able to go through that because it is quite expensive to do all the registration and all that. And we're also looking to put together a hedge fund to sell this sort of stuff to institutional clients.
Oh, nice. That's a great idea. So you guys are jumping and skipping and hopping. This is great.
Yep.
I love it. Yeah. So when was the last one we did these? It's been a few months now, right? It had to be. I was wearing shorts and bathing suits when we did this stuff. Which means it was the middle of the summer sometime, I'm guessing.
Absolutely. Yeah. It was before I did my trip to Europe. So I think I was maybe 2-3 months ago.
I think that's right.
Yeah.
Good. Yeah, good. I love it. This is awesome. I love this stuff. You present it well. It's very easy to understand. Make sure you go check this out, Lumiwealth.com, and get a look at this. Right. And then you know what? We'll work on some promo here when I think about it. We'll get something on the books. How's that sound?
Yeah, that makes a lot of sense. Yeah.
Awesome. Yeah. Love it. All right, good deal. Well, great to see you as always. I really always enjoy talking to you. It's right up my alley. And we're going to get Rob by himself next time doing his thing on a regular basis. All right, all good?
Awesome. Yeah, sounds great.
All right, man. Stay tuned. Please.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.